think about stocks after a 9-day winning streak? I mean, do you take some profits here?
So thanks, Matt. I also run our global allocation fund where we do mostly equities. Listen, I'd say a couple of things that we're doing in the equity market. First of all, this is as good a trading environment as I've seen in a long time. You know, there was a period of time where people were panicked about the downside, and you could sell puts on the market, reduce your equity beta, sell puts. And now you've got this amazing froth that, you know, you ride it a little bit. You run your equity beta a little bit longer because the sentiment's good. Maybe you get good news on trade. But now there's a great opportunity to sell upside calls because people will pay for the up 10%, 15%. And buy some downside. And so that's what we've been doing recently. You know, ride this a little bit, keep your beta elevated, but you can buy some downside protection. And I think, quite frankly, you know, some of the names that are moving now in tech and otherwise, you can sell some of the upsides because people have gotten super excited again, and then protect yourself so you can ride an equity market. Listen, the valuations, you're talking about 22, 23 times earnings. These are not great valuations. It's a sentiment-driven market. And it's one that there's just so much cash that people are looking for an opportunity to put some money to work. So anyway, you ride that, and then you know try and protect yourself in terms of any bad news.
One thing that's interesting to me is even after this morning's data, you do see more than 4 rate cuts priced in through the end of the year. And then you have Treasury Secretary Scott Bessent saying that the short end of the yield curve is also suggesting that maybe the Fed funds should be lowered too. Want to know what you think, because does really the economic data that we see right now warrant rate cuts so early in the year? You have one priced in right now to May.
So I've learned in my career, it's not a question of what I would do or how I would, what do I think they will do? And I think today this Fed will wait, and I think this Fed will take its time. Like you say, you look at this payroll data, and you take inflation that's running, depending on the metric you use. So let's say you use core CPI. I know they prefer core PCE, but if you use core CPI and you're running at the 3-month, 6-month moving average of 3%-ish, and then but pre-tariff, so you add another 30 or 40 there. Listen, it's not really an environment for that this Fed would interpret that and say, time to cut. So listen, I think the labor data will, you know, we talked about around openings slowing. I think the labor data will open up the window as you get into the June meeting, or maybe a little later than that, to get a couple of cuts done. But I think interpreting that they're going to cut off of today's data, I think, is presumptuous.